Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Friday, September 15th. Thank goodness here, right? Week is just about up. Hey, we got a lot of economic data to go over today, so we're just going to delve right into it. And we'll start off with the retail sales for the month of August. So back in July, we had it went up 0.3% retail sales. Forecast for July was actually supposed to dip down to basically nil, and actually dropped 0.2%. Now, when you take out the big ticket items like autos that can obscure these numbers here, we had a 0.4% in August. I'm sorry, in July, and August is supposed to be up another 0.4% again, and it only went up 0.2%. So obviously that's a little disappointing considering that we have back to school, and most people do back to school shopping in August. So obviously that's a little disappointing here. And obviously, as you can see, when you took out autos, we were still in a positive versus negative. So obviously, autos sales were down in the month of August. That also brings us to Empire State Index for the month of September. So this is manufacturing data out of the New York region. So back in August, we had a 25.2 on their index level, and it dropped to 24.4 in September. Industrial production. We had for the month of August, we had July at 0.4%, and forecast is supposed to be at 0, and it went negative. It dropped 0.9%. So capacity utilization for the month of August. So July it was at 76.9%. Forecast is supposed to show 76.8, so it's supposed to dip a little bit, and it dipped a little bit further than what we expected at 76.1 for the month of August here. Then we go to business inventories. We had a 0.5% jump in business inventories in June, and in July it only went up 0.2%. And last but not least, we got the consumer sentiment for the month of September. So on their index level, we had a 96.8 in the month of August. Forecast was supposed to be 94.5, and it only dropped to 95.3. So it dropped, but not quite as bad as expectation. So people are still relatively feeling okay. Definitely a mixed bag of things. Retail sales, even though it's up, but it was a little disappointing it didn't reach expectations, especially in a prime time as we see with back to school. Manufacturing dipped a little bit, capacity utilization dropped a little bit more expected. Of course, we got again industrial production and big ticket items like cars all kind of dropped. So overall, pretty much a mixed bag of economic news scheduled for today. So let's jump over to headline news. Stock market's up. Stock market really is shrugging that stuff off and really is taking this cue more from technology. There's some stuff going on in technology that's kind of bringing it up. I guess some possible trade mergers are being mentioned, and that's what's kind of helping out technology. It's also shrugging off news from out of North Korea. If you haven't heard, there was they launched another missile over Japan, and of course, they're getting kind of immune to the childish antics of North Korea because it doesn't seem like it really isn't really resulting in a whole lot. It's just this little tit for tat type of tactics that are going on between North Korea and U.S. and their allies. Also, there was a London bombing happened today. About 22 people at the Tube, I guess it was at the Tube, were injured. So we have our present wishes of we wish those people well over there. Hopefully, they're able to sustain those injuries and move on. So again, they're treating it more or less a terrorist act over there, and we're hoping that for the best for those in London. Let's go ahead and take a look here at the bond market. We got again this downward trend, but we're kind of having that maybe possible bottom or not, because lately the last few days we've been kind of this sideways pattern here, kind of between the 25-day moving average and the 50-day moving average here. And right now we're only down from this basis point yesterday, so right now about 5 basis points currently. So it's not enough to translate to any difference in pricing. So pricing for interest rates should be relatively the same. So let's go and take a look at the Treasury. As you can tell, it's pretty much kind of like an inverted bond market here. We're currently up here pushing up against the 220 mark, pretty much equal what we had yesterday, so there's no change. We are in between, again, the 25-day moving average, and we got the 50-day moving average. So there is room to grow for the 50-day moving average here, and we'll have to kind of wait and see if if it's able to rise or if it's going to kind of be held in check here. And as you can see, it's starting to have a little bit of a sideways pattern here as well, kind of like the bond market. So that pretty much concludes it for the day. I hope you guys have a great, wonderful weekend. Enjoy hopefully some football if you guys are into that. And if you guys want some further updates throughout the day, just come over to Twitter. You can find me at Mike Bjork on Twitter. Thank you guys for watching. I look forward to see you guys on Monday. Have a great day. Bye-bye.